My name is Praveen Khanna, and on behalf of ScoreMe and Resurgent India, it is my privilege to be your host today. We are joined today by an esteemed panel of members from the financial services industry, and it will be our honor to learn from their deep domain experience and their journeys from physical to digital banking and their experiences in working with the fintech industry in India. Before I invite the panelists to share their views, just a few highlights on the enormous growth of fintechs in India. Now, I guess unless we've been living on another planet, digital banking and fintech has been omnipresent today, right from wealth management, insurance tech, payments, and digital lending. In my view, there have been three phases of digital lending services and financial inclusion in India. The first phase was from 2014 to 2016, with the growth of Jan Dhan accounts and payment wallets. The second phase was from 2017 to 2021 and was driven by the introduction of UPI. I was reading the latest payment statistics via UPI released by METI yesterday. UPI payments have now clocked INR 7,400 crores. And just about 2 years back, these used to be about 3,300 crores. So there's been almost a doubling in the last 2 years. I believe we are in the third phase, which will be led by fintechs, digital banks, neobanks, and digital lending, and the new account aggregator model. One of the central parts of financial inclusion is the access to credit. It is, of course, a long road ahead in digital lending. Only about 2% of the total outstanding credit is via digital means, and the challenge is quite substantial on the MSME credit side, with some studies indicating that only 10 million of the SMEs are today covered through formal credit, versus total 68 million SMEs in India. So clearly there's a long run rate of growth ahead if we are to reach near 20% digital disbursement, similar to developed economies. India, of course, has the third largest number of fintechs globally after China and US, and of course the highest adoption rate at 87% as compared to a global average of 64%. We have our one estimate is suggesting that the Indian fintech market is at about 8.35 lakh crores. It is expected to grow to 2026 from the current number of about 2.3 lakh crores. Another interesting area is the emergence of BNPL. I think BNPL has been in India, albeit in various forms, like the Khata system at the Kirana grocery stores with revolving credit. The existing BNPL market in India is worth about 3.5 billion and is expected to grow to about 45-50 billion in 2026. Research is also estimating the number of BNPL users in the country may rise to about 80 to 100 million customers by 2026 from 10 to 15 million currently. I have myself witnessed this journey from a paper-based model in my earlier digital lending experience. I used to earlier work at a London-based financial services firm. I saw various journeys in the derivatives market and the syndicated lending market. Those were the days when it used to take 40 days for a primary syndication between an agent bank and lenders to take place. That then moved to a T plus 10-day cycle vis-a-vis the introduction of digital lending. And of course, now I'm seeing, especially with fintechs like ScoreMe, which is a 4-year-old fintech, helping in the area of paperless credit and digital lending using credit analytics. So with that brief introduction in mind, some of the themes that we wish to cover today, how fintechs are posing a challenge or a threat to a traditional bank. What's the role of AI, ML, and analytics in designing credit rule engines? What could be the guidelines for fintechs, especially given that RBI has recently released a very important paper, and evolution of neobanks and their challenges in monetizing neobanks. So first up, we've got a very diverse group of senior members from the industry. I'm really looking forward to hearing their views today. First up, I'd like to invite Ms. Melanie Johar. She's VP Risk and Policy and Analytics at MobiKwik. Melanie is a very seasoned banking professional with about 14 years of industry experience, having worked with leading banks and financial institutions in the past. In her current role, she handles credit risk for BNPL vertical. In terms of her education, Melanie is a graduate from the prestigious Indian Institute of Technology, Delhi, with a love for problem solving And personally, she's a mom to a 4-year-old daughter. And Melanie, just to let you know, I'm a father of a teenage daughter myself. And I can say from personal experience, it only gets tougher as the years progress. With that, over to you, Melanie.
Thank you. Thank you, Praveen. And thanks a lot, first of all, SCOMI, for giving me this opportunity to be, to share this podium with, such esteemed and accomplished individuals. And thanks for the introduction. As Praveen mentioned, I currently work with MobiKwik, and I head their credit risk policy for their BNPL segment. And I've been with MobiKwik for just shy of a year. And before that, I actually spent 13 years with a consulting firm called EXL Service, where I got the global exposure to the banking industry. So I have spent years and years with chief risk officers of leading banks in the US, in Latin America, in other APAC markets, advising them on their credit risk policy. And something that I started off in 2008 when I graduated from IIT Delhi to 2021 when I left EXL to join MobiKwik. And I think in those 13 years with EXL and in the last year with MobiKwik, the change that I have seen, it's tremendous, right? As you mentioned, right, when we started off our careers, we created those we filled those paper bank forms, and to now just some of these things are available at click of a button. So after spending 13 years with global markets, I think what was important for me was to see how I can bring the learnings from the rest of the country, rest of the world, to my own country. And that is where I got this opportunity to work with MobiKwik. From talking about the banks to working with very traditional banks in US, in LATAM, to working with a fintech, I think I do see that there is so much value being created by today's fintechs. And when we see that what purpose are the fintechs serving today, when this fintech term is actually also relatively new, it started off being very, very, it started off as a very small thing that, the banks thought it will go away, but it started becoming mainstream in the last 5 to 8 years. And it started off as kind of filling in the gaps where this traditional banking was not working, whether it was geography, whether it was addressing the credit needs or the banking needs of a particular segment that was ignored, whether it was looking at the right set of information of a customer to determine whether this customer is creditworthy or not. So we have typically been only looking at the bank statements and the tax statements and of the customer, and then when we come to a country like India, where very recently there has been this movement from a khata and a cash economy to an account-based economy, and everybody has now bank accounts. Everybody has a smartphone where they can access their bank accounts on their phone. There has been a tremendous shift in the way people want their banks to work for. So earlier, it used to seem like the people are working for the banks, and now the banks have actually started working for the people. So this shift and this finding the starting off as finding the gaps, and now fintechs have actually come up as a very, very strong competition to the banks. Another thing is that looking at just the traditional information of a customer, a lot of customers would not be really, and I'm coming more from the BNPL segment because that's the segment that I lead, right? So there is a lot of requirement for working capital. There's a lot of requirement for small ticket for small ticket loans for a particular customer. But if we look at their traditional banking, if we look at their traditional variables, we will not be able to get the credit worthiness of the customer. But if we look at some of the other things, whether this customer has been paying their bills on time, whether this customer has maintained his credit his bank account to a certain limit, month over month, year over year. All of those things also start playing into the role of making those credit decisions for a customer. So any other particular thing that you would want me to address here?
No, that sounds excellent, Melanie, for the opening remarks. And I think two big takeaways from your initial statements. People were earlier working for banks, and now banks working for people. That's a very, very powerful message. And I think your other message around traditional banks and working capital loans. So I think the area that you were trying to perhaps raise was the availability of sufficient data and optimum data to have a credit history, and therefore determining the eligibility of loans for the working capital loans. Was that the point that you were trying to make?
Absolutely. And I think the other thing is that when we, exactly 2 years ago, when the entire world started facing the threat of COVID, and the access to physical banks was limited, or people were really like, I know all the banks were working, everybody was coming to the office, risking their lives and putting the lives of, putting their duty in ahead of their own safety. At that time, it was also the fintechs, which, and the drive towards this digital banking, which helped kind of bridge again those needs of the customers, because customers who were comfortable taking care of their financial needs, sitting at home and not having to visit the branches, or not having to go through a physical journey if they need to create a bank account versus if they need to take a loan or any other transaction needs. Obviously, there has been a lot of push from RBI, etc. The UPI, I think, has been the biggest revolution, and UPI is something that has also been copied now by a lot of other countries, and UPI was one of kind of first of its kind globally. So there is a lot of innovation that is happening in the banking sector. A lot of it is coming because because the fintechs and as well as the other institutes figured out that there is a lot of gap, and filling that gap was the first and foremost the idea behind creating all of these digital fintechs and neobanks and all the other terms that we hear. They are all coming from the fact that there was a big gap at the beginning, which we are all trying to fill.
So perfect. So I essentially, I think the message that you're trying to convey is technology has been a big enabler in financial inclusion. Thank you so much for your views, Melanie. Next up, I'd like to invite Dr. Neeraj Sheth. He's the founder of OCare Group. Dr. Neeraj is an alumnus of the prestigious University of Manchester and wears many hats. He's a successful serial entrepreneur, a startup advisor, and a strong business leader, and a rank-holding doctor practicing in the UK and in India with a demonstrated history of working in hospitals, healthcare, and financial services. Dr. Sheth, even my wife happens to be from the healthcare sector. She's a nutritionist herself. So please go ahead and share your journey, sir.
Thanks, Praveen. So I think I'm only the non-professional on this panel, coming from an altogether different sector. As you rightly mentioned, I'm a doctor by profession. I no longer practice. I used to practice earlier, and slowly translated my journey from healthcare now to financial services and technology. The core belief and what the agenda for this session also is, and technology enabling inclusion, technology enabling simple processes, and revolutionizing banking. The thing here is that traditional stacks at banks need support, need technology, so that they can really start reaching out to a larger audience with their products, with their services, something which fintechs are enabling. The sector where we are, neobanks essentially by definition is nothing but a digital layer on top of a regulated bank, trying to streamline certain services, certain products, and using technology to create a mass adoption in the market. What is really happening in the digital world, because there is abundant amount of data, abundant amount of information available, disseminating that information and picking out the information that is really needed for various products. I mean, when we talk of risk, when we talk of lending, when we talk of even repayments and recovery, that piece is where technology, I believe, can play a crucial role. And then that's supported with platforms which can actually offer solutions to customers for managing it simply. Malini mentioned about COVID and what happened really during COVID. We had people sitting at home. There was a surge in online orders all across all platforms, people using UPIs for making payments. And then post COVID, we saw a slight drop in that because people started getting out. So, but the difference is that even after people started getting out, the use of technology has been there. People are still using UPI. A guy who used to remove his wallet and make cash payments at one point is now using his phone and scanning a QR and making payment. Now, if banks are able to partner with fintechs, partner with digital platforms, and are able to create smaller products which can make life easy for this customer, who is willing to now remove a smartphone and use technology for his day-to-day transactions, for his day-to-day credit needs, then that's where, the real change can come in. And, the topic of fintechs and neobanks and banks, I mean, essentially, that's a debatable topic. There's a lot of conversation going on everywhere in the world. My take there is very simple, that it is not about fintechs versus banks. It is about fintechs plus banks solving the problem of the customers. And that's the most important thing. Banks should not be looking at fintechs and neobanks as competitors. They should be looking them as partners and enablers, because a fintech can never really replace a bank. A bank is someone which is governed by the regulator, it's licensed, it has its own compliances to follow. A fintech is necessary just an extended arm. And banks, if they start looking at fintechs with that, we will really be able to achieve. In our journey in building this, I can share some of the insights. We had crazy challenges talking to bank partners, trying to convince them of the use case that we are working on. Because, in the digital world, again, data dissemination, vertical focus is something that is crucially important, because you can't really serve all sectors at the same time. You need to go deep down on a particular vertical and then, expand there. So explaining banks for a use case and then working with their teams trying to get into an integration, and the challenge posed by banks were real. They said, how many wrappers do you want us to put us on our stack? And how many more connects you want us to create? I mean, which is a real challenge. The point is, how do you solve for this challenge? What kind of technologies can come into play? We have one use case of one bank in the market. I mean, we have read multiple articles about that SBM Bank, which has multiple fintech partnerships trying to enable access using that. I mean, my belief is that even large banks should be doing it. And once that happens, then they have the balance sheets, they have the abilities, fintechs has the reach, and the products can really go out, and that's more important. Platforms like ScoreMe, platforms like credit enablers, risk underwriters can all come into the play there, supporting the fintechs and making life easy for the banks. But question, and that's a question on this panel. I have two senior bankers on this panel, and it would be a question for them also to answer. Are banks really ready for this transformation? Are they really looking at fintechs as partners, or are they really looking at us as competitors? And if banks has to start looking at fintechs as partner, what is it that is really required? And some insights on that, I think, will help us, help all the attendees also, and to see what will be the way forward.
I think that's a perfect note for me to introduce Shams Tabriz sir, DGM SBI SME Business Unit. I think you've made my job much easier by raising that question. Mr. Tabriz is a senior banker with about 20 years of experience, having joined State Bank of India in the year 2000 as a probationary officer. Mr. Tabrez has held various critical positions. He's been a branch head at the bank. He's held middle and senior management level positions. He's worked as a credit officer, a relationship manager for more than 5 years. He's also worked as a faculty in credit and risk and international business banking at State Bank of Institute of Credit and Risk Management and Apex Training College of SBI, Gurgaon, for 5 years from 2014 to 2019. So Shyam sir, please go ahead and share your views, sir.
Very good afternoon. Am I audible?
Yes, absolutely, sir.
Yeah, I thanks everyone, and especially to Dr. Neeraj sir. He has raised a very pertinent question, whether bank is ready or not. That's a very valid question, and that is what the bank has to think. Because see, the new changes, how it has come. The millennials, we call digital millennials, the data, technology, the innovation, and the liquidity. There are liquidity in the market, enough liquidity with the banks. Because the Indian economy is driven largely by the savings of the households. You'll see, as compared to other countries, our savings drive the economy. And these are the reasons that despite there is a requirement of funds, there is a problem of access of finance to the MSMEs. The bankers have not been able to build that. That's a fact. And the reasons are many. The reasons are informal sector. The reasons are, as a banker, we are looking to the traditional funding. We want to ensure that the money we have given, will it come back or not? We want to ensure that the end user funds and lots of requirements of this. But now this fintech and the new bank, this has changed. This has changed dramatically and drastically. As a banker, we see that collaboration with the fintech is the need of the time. Now the big is not only the beautiful, but big with the small is not only beautiful, but meaningful and useful for the society also. Because fintech comes with the very innovative concepts. Let me tell you, the fintech comes with the data. Fintech comes with the faster processing system. Fintechs come with the innovative concepts of funding. We call it nowadays artificial intelligence, data analytics. So in SBI, what we are looking for, we are employing advanced technologies like artificial intelligence, and we are also looking for tie-up with the fintech companies, and we are employing the machine learning to optimize the customer acquisition process for reducing cost. Incorporate alternative data. Again, when we come to the data, now what I see, the balance sheet for MSMEs, we have been funding on the basis of the balance sheet. That is no more relevant as of now. And there are at various platforms, the debate is going on whether we need to rely on the balance sheet, because most of the MSMEs are really businessmen. They cannot afford some times or money also to get their balance sheet framed, audited, and then presented. Now this fintech and the new age technology and the data, automatic, everything's coming up. We call it as a cash flow now, because GST, the GST has also given a very leeway, or you can say advantage. Anybody, MSMEs are registered with the GST and his bank account statement, both together can have some sort of combination. Like there's a platform called CLP, we call it a CLP, TSB 59 minutes loan, where this has been come into the picture since 2018, where any existing businessman not having a borrowing but having a current account and is a GST registered and files the income tax returns. So the combination of these income tax returns, the combination of account statement and the GST data, it gives a very beautiful picture. What is the turnover of the unit? And that is validated by the technology. Now, artificial intelligence, we call it a artificial intelligence. We understand, everybody aware that there is a phases of descriptive technology. Then we move to the predictive technology. Now prescriptive. So now the time has come. It's like that we see in our mobiles when we last week, let's suppose we have visited a movie hall or we have gone to some shopping. So the artificial intelligence in the mobile, there is some scenario, they will remind you, oh, this is the time, like Book My Show reminds you, now this is the time to go for the movie. So they prescribe, or you can say they predict. So similarly, in this finance world, the fintech will help, or you call it new banking, that is app-based banking. When we talk about a new banking, it is not seen in the market. N for not seen in the market, and E for easy for transaction, and O for onboarding customer faster. It relies on the customer experience. So I'm talking about artificial intelligence. When we talk about B2C, or we talk about traders, or we talk about manufacturers, if he has his data is capturing when he is paying to the buyers or sellers or creditors, means the transaction paying to buyers, I say, mean to say, if the buyers is paying to him. So artificial intelligence will tell in the future that, see, he needs funds now, or he is excess of funds now. He needs to liquidate his loans. Now he needs to increase his loans. So this fintech collaboration with bank will definitely help meeting the or filling the gap of the credit. Because as of now, there are so many data that 20 lakh crores, there is a gap. The gap is huge. It is just a rough data I see, because looking to the population, looking to the scenario in India, there are enough scope for funding the MSME. So what we are moving of, we are in the process of embracing fintech and collaborate with them to make faster and safer lending choices using the analytics tool. An end-to-end digitization of semi-credit delivery mechanism. We are leveraging technology, artificial intelligence, machine learning, business analytics. For example, we have a platform like YONO. Many of you may be knowing it. YONO, through YONO, we are, means anybody is having YONO and is banking transaction. There are two products we have launched. One for the person level, that is a pre-approved personal loan. That YONO will give, it is an artificial based interest, he will give intake. You are eligible for a loan of this much amount on the basis of your turnover or transaction in the account. Similarly, for the businessman, we have launched a pre-approved business loan. Those who is having a current account, on the basis of their transaction details using machine learning, data analytics, and artificial intelligence. Since we, State Bank of India, already have got a very build-up of analytics department, technology, we call it a global technology center. So there, we are using it, and on the basis of the account transactions, the customers are given the information that you are eligible, you have been approved, pre-approved business loan. So our aim is to building advanced digital footprints through adoption of new technologies in coordination with fintech to reduce turnaround time. This is also an advantage of the fintech collaboration, because fintech also helps in onboarding the customers. Because reaching to the customer, for the customers, reaching to the bank branch, it's not an easy job, especially those persons who is having a business. We cannot have time go to the branch and wait there and meet the branch manager and convey his ideas. He needs a business. Now, fintech provides that all those information to the bank. You see, this is the person, he is doing the business, his turnover is this, he is paying this much of tax, he is paying this much of GST. Now, bank is following after those customers on using the fintech. No, I need you, I want to onboard you. You are eligible for loans. So this technology has changed a lot. So there are lots of topics. Other speakers also I'll like to listen. So I'll definitely address other questions. So finally, I'll say to the questions of Dr. Neeraj said, yes, sir, bank is not looking fintech as a threat, but as a collaborator. We are collaborating with the bank. Thank you.
Perfect, perfect. Thank you. Thank you so much, sir. And very, very important themes and points that you've raised today. the availability of data, the demographics via the millennials, especially the Gen Y, Gen Z customers, the availability of liquidity and the high savings rate in India, and the challenges, especially from an SME standpoint, in terms of the informal sector and the traditional funding practices, and the move from a balance sheet based lending to a cash flow based lending. So I think the sense I'm getting is that the collaboration between traditional banks and fintechs and neobanks, I think it's a win-win proposition. And using AI, one can move from a descriptive to a prescriptive kind of a methodology. Thank you so much, sir, for sharing those views. So next up, I'd like to invite Mr. Akhilendra Kumar Mishra. Akhilendra ji is the ex-GM Central Bank of India. He was promoted to General Manager with effect 8th May 2019 and posted as a Field General Manager Delhi Zone, consisting of 7 regions, 357 branches spread over Delhi and Delhi NCR and the entire state of Rajasthan and Uttarakhand. After having superannuated from the bank services, he's been re-employed in the position of faculty as a domain expert on credit, term, project appraisal, and has been working in capital assessment, capital budgeting with the Indian Institute of Banking and Finance. Sir, please go ahead and share your views, sir.
Yeah, thank you, Vishalji, for your kind introduction. I think so far my introduction is concerned, we have already briefed the audience. With regard to coming down straightforward to the topic, collaboration between the banks and the fintechs, and the apprehension among each other, whether they are going to disrupt the business for the bank or they are going to collaborate with the banks to facilitate more and more business. In my view, there is no situation of any disruption putting forward by anybody else against other. It's a situation of win-win, as rightly Dr. Niyaz said, that looking to the numbers the banks are supposed to deal with. The traditional banking, manual type of banking is not possible. And now the time has come to utilize the technology, leverage the technology, and be efficient enough, because the distribution model of traditional bankers, particularly PSBs, have been inefficient. We were taking much of time, as some speaker said, we were taking 40 days of turnaround time. That is the not time available with us as of now. We have to take decision within days. And to facilitate a decision, create decision within days, we have to adopt technology. And this technology can be made available readily in a ready-made form by fintechs only. Now, to buttress my point, what I have said and what my previous speaker, Mr. Tavrej, has said, let me share with you some statistics. Talking about the banking industry in India, the total borrow accounts are around 28 crores. And you will surprise to note that out of 28 crores of borrow account, I am talking about numbers, hardly 41 lakh borrow accounts are having ticket size of loan more than 25 lakhs. Meaning thereby about 27 crores of borrow accounts are having ticket size not exceeding 25 lakhs. That is the number of borrower accounts having lower ticket size. Now let me share with another statistics coming down to MSME sector in particular, which is contributing 30% towards our GDP, contributing 45% towards industrial output, contributing more than 40% to our export, having more than 6.5 crores number of units, whether it is micro, small or medium, and catering to the employment of more than 12 to 13 crores of Indian population. The MSME sector being of so much importance of our Indian economy is concerned, total credit availed by this sector is about 70 crores. And the banking industry, formal sector, including NBFC, digital lending, whatever we can call it, all aggregated together, the total lending out of 70 trillion crores is 16 trillion only. That means 54 trillion credit has been provided to MSME through informal sources. That can be traditional lenders, that can be other than formal sources. Despite of that 70 crores of credit provided to this sector, including 16 trillion by banks, there is a credit gap of around 30 trillions as of now. This is one aspect. Now coming down to MSME in general, about 4.5 crores of borrow account, 99% of them are micro units. 99, precisely it is 99.29%. And if we take about the average lending provided to these micro units, it is hardly 2 lakhs per borrower. I don't think anybody can believe, going by the latest definition, classification definition given by RBI, with effect from 1st July 20. Micro units, micro enterprises are the enterprises whose investment in plant and machinery is up to 1 crore and the turnover is not exceeding 5 crores. If we take 1 crore as investment for providing any machinery fixed assets, applying the margin of 20% or 25%, 75 lakhs can be the term loan. Taking about the turnover of 5 crores, applying 20% turnover method of Nayak turnover method, the limit comes about 1 crore. That way, if we take in a copybook style, the minimum credit to be provided to a micro unit should be 1.7 or 1.75 crores. Whereas the average lending provided to MSME units is hardly 4.19 lakhs. This is the difference, this is the gap of credit being provided to the important sectors such as MSME. Obviously, if the credit is to be expedited in a manner which is cost effective, what the public sector banks are facing the problem, our cost of operation is high, and to cater to the small ticket size loan, suppose 5 lakhs of loan, 10 lakhs of loan, the evaluation of credit risk of that borrower takes time. If you go by the traditional method, manual method, then providing them services, onboarding them first of all these are cost incurring. And looking to the small ticket size of 10 lakhs or 5 lakhs or 15 lakhs also, it doesn't become remunerative for a bank to serve them in an effective manner. And that is why if the banking industry has to serve those sectors, cater to those sectors important as MSME, then fintech collaboration is the only way out. Otherwise, it is not physically feasible to serve them and to provide them credit. So for the total credit portfolio of India, our country is concerned, let me share with you another statistics. Our CD ratio, country as a whole, out of total 162 trillions deposits, hardly 116 trillions are the credit. That makes a CD ratio of 71 to 72%. If we talk about credit GDP ratio, it is hardly around 55%, as against 162% in case of China. Emerging industries are having a credit GDP ratio of 132 and 35%. We are far lagging behind. And if we are talking about seriously making our economy a $5 trillion economy, the credit has to be just developed within a period of 2-3 years. And if at all this credit figure of 116 trillions is to be developed, then obviously this cannot be made possible by traditional banking, what we have been doing since last 40-50 years. It has to be done in an innovative way, and the innovation we can adopt by way of collaboration with fintechs. And that's why I don't look upon the fintechs as a competitor, as a threat. Rather, we have to collaborate with each other, because banks cannot function. The credit growth of the country, the credit assistance to the needy people who are into the business, who are into the entrepreneurship, cannot be provided feasibly and in effective way without collaborating and utilizing the technology which the fintechs are in a position to provide. With this take, I conclude here. We will be answering the other aspects of the topic later on. Thank you very much, Vishal.
Thank you. Thank you so much, acclaimed sir, and some very, very important messages that I could capture basis your message. I think the core theme that I captured was traditional banking without partnership with fintechs is just not possible. And obviously decision making has to be done not just within days, but also within minutes now. And obviously the significance of MSMEs, both from an employment generation standpoint and also from an access to credit standpoint, that's where fintechs can play a big, big role. So thank you. Thank you so much for sharing those very, very important and pertinent messages. I would now like to invite Dr. Jasmine Gupta, National President for Financial Inclusion Council, WICI. Jasmine Gupta is a skilled in banking, in sales, in P&L management, in strategic alliances. She has won the ET BFSI Award for the Best FinTech Alliance of the year 2021 and IDC's Innovation Omni Experience Award in 2021. She has also been conferred India's Inspiring Leader Award in 2021 by ELETS BFSI and APAC BFSI Innovation Leadership Award. Over to you, Dr. Jasmine.
Hey, good evening. I hope I'm audible.
Perfect, perfect. Loud and clear.
Great. So I think we had some great views all throughout from our co-panelists. And so now, as the last person to speak out, I would like to sum it up as well as add a few points from my side. So yes, we all agree that open banking, banking as a service, API banking is going to be the norm going forward, because traditional banking, as Mr. A.K. Mishra just mentioned, will not be able to cope up with the digital speed that is required for the growth for the next 2 decades. And hence, we say that the fintech partnerships are going to be the way forward. Having said that, I think there are various kinds of business models. One business model is where a fintech collaborates with a bank and comes out with its own new target segment specific proposition. Now, these are the specialities of neobanks, wherein they have their niche offerings for specific target segments, like factory workers or millennials or salaried or fishermen or gig workers and MSMEs. So these are very, very specific target segments. The needs of these segments are very specific. And hence, I think fintechs being very agile and nimble-footed and the speed to market being very, very fast, they are well placed and best placed to cater to the needs of these segments. Now, the structure in India is such that the neobanks on their own, of course, they cannot function. So they will have to bank on the license of the licensed banks. Having said that, we are looking forward to a scenario wherein standalone digital banks having their own licenses can also come up. So we have the Niti Aayog recommendation paper, and we want to see some definite good progress there as well. So coming back to business model. So this is one business model where a neobank, along with a bank, caters to a specific niche market segment. There is also a challenger bank within the bank concept also coming up, wherein within the banks themselves create their own fintechs, and the digital bank within the bank actually competes with the traditional banking of that particular bank itself. So that's also a hybrid model that the banks are evaluating and figure out how they can be competitive along with the fintechs. And the teams that they select for these challenger banks are also the right kind of people who we see working with the fintechs using the right kind of technology. So I think the incumbent banks are also exploring ways on becoming competitive. So that's a second kind of business model. Now, I think globally, if we see how Revolut and Monzo have performed in the last 5 years, how N26 and also some of the banks like Next in Brazil have done, I think the scope for digital banks is huge in a country like India. And when we talk of collaboration, it is not just collaboration between banks and fintechs. It is also about collaboration between fintechs and neobanks, what they together can come out and collaborate and bring to the market. It is also about collaboration of fintechs and edtechs, and all of these innovations bringing out newer things into the market. We have seen very good innovations in the last 1 year. I think 2021 was a fantastic year in India specifically because it saw some of the best neobanks like Jupiter, Neo, Frio, Epify coming into the market. And I think the opportunity is huge for the next level of neobanks also planning to make their way in the industry. So that's some of my thoughts. Thank you.
Thank you, Dr. Jasmine. Really appreciate it. And I think a couple of very, very important themes that I captured were the idea of standalone digital banks and really profitable banks, which are full service banks, as per the Niti Aayog paper. And of course, the challenger banks within the banks. So a digital bank emerging within the traditional bank itself. I thought those are very, very important themes that you've just shared. So I think a very, very fantastic and a very insightful discussion so far. I think some of the themes that I've captured is neobanks and fintechs. They are here to stay, and they obviously need to partner with traditional banks if we are to enable greater credit access in India. I think several talk about the BNPL initiatives as well, and how one can build solutions both from a Gen Y, Gen Z perspective. Happy to invite any closing comments. Please go ahead, sir.
Yeah. With regard to the collaboration, we will have to understand that there are three major players, as all the speakers have said. The first of all, the traditional banks, who are having the license and who are to operate within the direct supervision and regulatory norms of RBI. Then comes fintechs, those who are not regulated, but they can collaborate, and indirect supervision can be implemented through the traditional banks through whom they are operating and collaborating with. And another segment, let us not forget that it is NBFCs in the form of fintechs also. They are also collaborating with fintechs also, and in some cases they are collaborating with neobanks also. Now, these 3-4 stakeholders are having different niche areas. Now, the traditional banks are having the funds, and funds they are having at a very lower cost. If you talk about the cost of funds for the banks as of today, it is hovering around 4%. Now, if you move on to NBFCs, their cost of funding on an average is not coming below 7.5%. Then comes fintechs. I agree that Niti Aayog has come out with a recommendation to give licenses for 75 digital banks, full-fledged, with full regulatory norms applicable. But that is going to take time. For the time being, till the time these digital banks doesn't become fully operational and functional, because it is going to take time. The funding requirement of the community, of the businessman, of the entrepreneur will have to be made by the banks itself. And if it is to be provided, it can be provided either by banks, traditional banks collaborating with fintechs, or to NBFCs. Now, there can be 2-3 models, as the last speaker, madam, was talking about. There is a model of co-lending model. We are purchasing the portfolio of NBFCs. They are into the finance. Once the portfolio builds up, it is being shared on the basis of 80 to 20%. 80% of the portfolio is being transferred from the balance sheet of the NBFC or the financing MFI, and the banks are taking those, getting transferred. Risk participation is on the basis of 80% on behalf of the banks and 20% on behalf of the MFIs or NBFCs. It facilitates, it meets the criteria of regulatory liquidity and potential norms as stipulated by RBI also. Any fintech having no capital or sizably lesser amount of capital cannot go on in the lending business at a large and mass scale, because it doesn't have the capital to meet the regulatory requirement of liquidity and potential norms as prescribed by RBI. Otherwise, also fintechs are not under the direct purview of regulatory norms. That way, it is a mutual need of each stakeholder. If the lending has to be done in a more fast and effective, efficient way, then the banks need fintechs and neobank collaboration. If NBFCs are serious to expand their business in the market of credit, they have to collaborate with banks under co-lending model, which I talked about, risk participation at the rate of 80 and 20%, whereby the NBFC risk will be 20%, 80% risk will be taken by the banks because they have the capital to bear the risk. And the fintechs, they can provide the technology, they can provide the new innovative ways of doing credit assessment, evaluating credit risk, evaluating, capturing the data which is available in the public domain, as the previous speaker, Mr. Samstavre, has told. GST, with the advent of GST regime, every data, sales turnover, it can be captured. It is not required for a particular entrepreneur or a firm or a company to submit those finances in a paper form. Everything can be captured online through MCA portal also. ROC details can be availed. That way, this collaboration between bank, the first stakeholder, the second NBFCs, which are also trying to collaborate with fintechs and fintechs themselves in the form of neobanks. This collaboration will, for the time being, till the digital bank 75 in numbers, as announced by Niti Aayog, comes functional, fully operational. It can meet the need of the hour, and for 1 or 2 years till they are fully made functional, we can expedite the process of credit dispensation to these needy people. That's my take on this side.
Thank you. Thank you so much, Akhlin, sir, and very well summarized. Any closing thoughts,
Hello,
Dr. Neeraj?
Yes.
Please go ahead. Please go ahead, Sham. Please go ahead, Sham, sir.
I want to have another viewpoint also.
Okay.
Since I have been into the bank and I have been looking to the finance, I started my career in 2000 and even assessing the limit of 10,000 rupees also. Okay, fintech, new banking, digitization, GST, everything is there. But still what I'm afraid of, the level of awareness among the mean MSMEs. As Mr. Mishra sir has said, there are over 99% constitutes of micro enterprises.
Right.
They do not understand technology. They do not understand innovation. So what I mean to say, see, for taking care of the access of credit, financial institution is one important pillar. We agree, all of us agree. But another pillar is, again, infrastructure. And the tax authority is most important pillar. I'm little critical in this, but this is a platform we have to say that GST regime has to be flexible, has to be friendly, has to be encouraging for the MSMEs. Because what we have seen, I have personally seen, the units go for the registration of GST and the sales cannot remain constant.
Right.
They receive the notices. So tax authorities need to understand that these micro small enterprises are also their customers. They have to treat them with sensibilities and with sensitivities, that there are long run implications for helping these MSME, because we all know that they are employment creator. They contribute to exports also. This is important aspects. What I feel that despite, for example, I'm giving the data. We have got PSB 59 minutes loan. That's a fintech. But we also find that still the numbers, the applications are not coming.
Right.
Because of lack of awareness. So what I see in the long run, and as a banker, along with the collaboration, along with the digitization, along with the digital banking, the concept of physical will always be there. That is physical banking along with the digital. That for India, because we have to develop a culture of digitization, and that is a process. Yeah, thank you. That's what I wanted to convey.
Just to complement what some Savreji has said, out of what 99% he was referring to. 96% of those MSME units are under individual function or under proprietorship. They are not neither a firm nor partnership firm nor a company. Many cases you cannot have the data, business data, which can be captured through GST portal also. That we have to take into care, what he was hinting at.
Perfect.
With regard to the number, let me share with you the average ticket size of lending under PSB is 18 lakhs only, and that includes majority portion towards housing loan also. The number of PSB loan beneficiaries are hardly 2,24,000, and the amount disbursed has been till today right from 2018, so somewhere around 4,500 crores. Mudra loans have been publicized like anything by all. Around 34 crores of borrowers have got this benefit under PMMI, Mudra loans. But you will surprise to note that the average ticket size of loan in this Mudra, 33 crores got this, aggregate amounting to 18 trillions rupees. Average ticket size is hardly 53,000 rupees per borrower. And MSME, I have already told you, per account, availability of credit is hardly 2,000. MSME all taken together, accumulated together, aggregated together, the per ticket size of one borrower account is hardly 4.20 lakhs. That we're looking to the lower size of the credit provided to them. If it is to be multiplied, then collaboration will have to be done. And of course, what he has hinted, the tax compliance authorities has to be practical, has to be liberal, not to be punitive in their approach and working style.
Thank you so much, sir. I think in the interest of time, we are close to the hour today, and I think we've had a fascinating discussion. Dr. Neeraj, any thoughts? Any closing thoughts? Any quick closing thoughts?
First of all, thank you, Tabriz sir, for welcoming partnerships. I was glad to see that SBI is looking at partnership with Fintechs. One of the things after listening to the statistics read by both Mishra sir and Tabriz sir, I can say that while we can always comment that SMEs, MSMEs are not technology ready, there is a contrary view there where we have close to 92 crore smartphone users, and if they can today use a WhatsApp and a Facebook and get onto all online media channels and access Netflix, I think they can easily access banking portals and start working and start putting up documents. The idea is intent, whether they want to do it, awareness, how they can do it, and education and simplified processes. I think that's the job of the industry, private, public, government, fintechs, banks, everyone together, and how we can all achieve that and make life easy for the customer. And I think that is what is needed out here. And I think, India is poised there, all of us here, and the entire ecosystem is working towards that. So I can say one thing, let's make this happen.
Perfect. Thank you. More power to you, Dr. Neeraj. Any final thoughts, Melanie? I know you had a point around consumer lending and I mean, how do you see more engagement with Gen Y, Gen Z? That was one of the questions that we had received from the audience.
Sure. Yes. So I think we spent a good part talking about MSMEs and consumer lending. I think consumer lending is actually one of the areas where this digital lending is leading faster than the MSME lending, and this is because as Dr. Neeraj mentioned that the smartphone user, we have many more smartphone users, people who are digitally savvy, who are demanding that the services be made easier for them and the access to credit as well as access to everything. Right? You have Uber, that revolutionized transportation. You have Airbnb that revolutionized tourism. And like every other segment, we needed this kind of a revolution to come in because people demand better service, people demand faster service. But at the same time, adding to the point of Dr. Neeraj, that yes, the customers are ready for digital lending, but at the same time, when we talk about credit, there needs to be a focused attention on educating the customers in terms of what it means by when you are taking a credit versus when you put money in your wallet. You know, it's different. It can have long-term implications on your credit score, on the way you get credit into the future, you know, and especially these small ticket loans and BNPL. These are very, very good ways to get inducted to the world of credit, because earlier, I know back in my time, you needed to have, you started off with a secured credit card, right? And to get a 30,000 rupee credit card, you had to deposit 1 lakh rupee or 60,000 rupees to your bank account, maintain that balance, and then you get it. And then you slowly build up your credit history. But today's user does not want to do that. Today's user does not want to wait for years to, you know, get inducted into this credit, into the world of credit history. So education is very important, is as important as making this accessible, because yes, access to credit becomes easier, becomes faster. We also need to make sure that it still works for the betterment of the customer and not, you know, fall in that trap of the customer. So we have to do responsible lending, and we have to take our responsibility in making sure that the customer is educated. And today's, these loans, today's users of fintech do not come majorly from Delhi, Bombay. They come from a tier 2, tier 3, tier 4 cities, because that is where those were actually the areas where traditional banking could not reach because of higher costs associated with going to the remote areas, etc. That is where actually the transition from physical to digital has been the most important. And I also love the word used by, I think, Mr. A.K. Mishra, was phygital. In India, we cannot have a pure digital banking or anything pure digital. We cannot have a pure physical, because that's also not need of the hour. Phygital is the way to go. And there is a reason why the West is focusing more and more of all digital. And that is also because they don't have as many people, you know. Honestly, the truth of India is we have a lot of people. We have access to cheaper, labor, for lack of better word. You know, we have access to cheaper talent as compared to the Western world, where they have fewer people. And so when, till the time we can manage the costs and provide the world-class experience to a customer with a mix of phygital, I think we can be the leaders in banking and in innovation across the globe.
Thank you. Thank you so much, Melanie. Really appreciate your closing comments. I think cheaper, faster, better. That's the way forward. Really appreciate all the comments from all the panelists. I know we can go all day long. Really fascinating discussion. Thank you so much. And really appreciate your time. I can see all the questions from the audience. They've all been answered. Thank you once again. And I look forward to staying connected with all of you in future. Really appreciate it. Thank you.
Thank you.
Bye-bye. Thank you. Bye-bye.
Everyone.
Bye-bye. Good day.
Thank you very much.